Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Don Jiacheng, Tony. Now let's get started with today's session. Good evening everyone. Actually, the performance of the US stock market yesterday pretty much sums up today's two main topics. It's really just a short-term struggle. The first point of struggle is the change in the Federal Reserve's interest rate decision. The second struggle is still about the topic of AI, whether it's becoming overheated. So the market continues to wrestle with these two issues. Let's first take a look at the interest rate side of things. Yesterday, the vice chair of the Federal Reserve, Jefferson, gave a speech. He believes that the risks of a downturn in employment have increased. That's right. This sounds a bit dovish, but then he added another sentence. Policymakers should act cautiously when interest rates are near neutral levels. Okay, after he said this, you can tell that this is another rather conservative stance. So this so-called more dovish official basically means that he also acknowledges that the labor market is slowing down, but the situation where inflation is moving toward the 2% target has somewhat stalled. Now, one possible reason for this is that the impact of tariffs, right? As for the future, their statement is that they will be data-driven, prioritizing and evaluating policies at each meeting. So this is more on the dovish side, not completely dovish though. The ones who are fully dovish are more like, for example, like Mester, the president of the Cleveland Fed. She's more hawkish, right? And then there's Lori Logan, who's also more hawkish. The chair and the vice chair, of course, the question is about the vice chair's position. Their position is still higher than that of regular board members, so their statements tend to be more hawkish. Now, as for the board members, one of them spoke yesterday. He believes that at the December FOMC meeting, in his remarks, the main point was that the labor market has already weakened and monetary policy is hurting middle and lower income consumers. So that's another perspective. Now, let me add two more pieces of information here. One is listed here, and it just so happened that yesterday, Fed Governor Cook, well, her lawyer made a defense statement. Judging from the direction of the defense, they believe that this is what they call the accusation from Trump and the Department of Justice that she committed fraud. So they believe that regarding this, they're basically arguing that it was an oversight. In other words, it was a mistake or negligence, not fraud. Will this argument hold up? We don't know yet. We'll have to wait and see. I think this case is pretty much 50-50, and it might even lean toward not convicting her of fraud, because in cases like this kind of negligence actually happens a lot in the US, cases like this. If it's really not particularly serious, it's actually pretty hard to get a conviction. Most people just end up paying a fine, so that might be what happens in this case too. I also want to add one more piece of information. So John Williams from the New York Fed, he and some industry insiders, it was revealed on Saturday that they had, on both Saturday and Sunday was the 16th, it was disclosed that he had meetings with these industry participants, mainly discussing liquidity issues. So I just remembered to add this as a supplement. That's about it. Now, as for yesterday's speeches, only Waller and Jefferson, whom I just mentioned, spoke. But the thing is, the market is still digesting this information. So yesterday I mentioned to everyone that it's possible there will be a pause in rate cuts this time. I think the market is still reacting to this. And another thing is, let's answer this first. Right now, we can see that the positions of the Fed officials are quite divided. There's one camp that's against cutting rates. Generally speaking, the presidents of the regional Federal Reserve banks who have voting rights on monetary policy tend to emphasize inflation, while among the Board of Governors, they're more dovish. Michael Barr is more... He tends to be in the camp that wants to vote against rate cuts, against lowering rates. Then there's another group that's pretty clear right now, which is the three governors appointed by Trump, Christopher Waller, Michelle Bowman, and Stephen Miller. These three want to cut rates, while the others either oppose rate cuts or think that more observation is needed. So the market is still reflecting this. By the December FOMC meeting, this kind of situation might occur. Whether they cut rates or not, you'll see three dissenting votes. So how does this work? If they decide to keep rates unchanged, the three dissenting votes will come from the three board members appointed by Trump. But if they decide to cut rates, there might also be three dissenting votes. Why? Well, at least three, because it's possible that some members within the Federal Reserve, like Lori Logan, have already indicated that they oppose a rate cut. Opposing a rate cut, right. So this reflects a situation where this FOMC meeting is likely to be more divided, making it harder to reach a consensus. And when it's hard to reach a consensus, it all comes down to who gets more votes. Also, I think there's another underlying issue here. We're going to see some data released today, but as more data comes in, people will definitely question the reliability of that data. Maybe the reliability of the data will also spark controversy, which could lead to the possibility of delaying a rate cut. So please pay attention here. This is something the market is still reacting to. Now, the market still generally expects that there will be 3 rate cuts within a year, as we can see. The orange line above with the red text refers to the effective federal funds rate, and the black line below roughly represents the market's expectations for the future. At each point in time, it shows the expected rate for the coming year. The level of the interest rate, right? Now, what you see here is roughly a little above 3% as the expectation, which means the market expects over the next year that there will still be about 3 more rate cuts. This is pretty much in line with market expectations for most of the second half of the year, right? Compared to before, it's just 1 less rate cut, so it's not a huge difference. Looking at the overall rate cut changes, it still seems like there will be at least 75 basis points, and if it's 80 points, that's more than 75. So from this perspective, that's how it looks. Even if they skip a rate cut this time, the overall trend of rate cuts probably won't change, unless there are unexpected changes in the numbers or the economic situation. Otherwise, it still looks like rate cuts will continue gradually. Now, what I want to tell everyone is that I really think this time it's actually possible that they might pause once, but the problem is there will still be rate cuts later on. First, let's look at 2 of the latest examples we saw yesterday and today. The first one is from the Cleveland Fed, which did a study. They're about to issue a large-scale layoff notice in October. It's a surge, really spiking here. You can see that there's a blue line. There's a spike after 2020. It shot up to over 600,000 and then just disappeared. No one knows where it went. What is this? Well, 60,000 people. When was this? This is to tell you that was during COVID because there was an economic shutdown. So these layoffs were. This belongs to, I think it's an outlier, a low peak, so you can actually exclude it. But the thing is, if you look, the rest is from 2008, and that was only because of the global financial crisis. But now, if you look here, the current situation is actually pretty close to that. A notice involving 40,000 people. So looking at it from this angle, this is still a relatively weak signal. What does this reflect? It shows that the market is really starting to slow down. Okay, and there's another thing we need to mention. So personally, I think there will probably still be reasons for continued interest rate cuts. One reason is, for example, last Friday, Trump announced tariffs on things like beef, bananas, and coffee. Exempted goods, right? So what are we talking about here? I want to mention that we're holding an investment committee meeting today, and I believe some of the information can already be found online. Here, we're talking about Trump's current situation. His approval ratings domestically are actually... The dissatisfaction rate is actually quite high. His supporters, his fans, still seem pretty loyal, but the problem is that the number of people opposing him is increased. So now, if he wants to ease public resentment, the first thing people complain about is the price level. Now, the prices here aren't the same as what the Fed sees in the CPI or PCE numbers. What we mean by prices here is what consumers see when they go into Walmart or other stores. It's about how people feel when they go shopping at retail stores and buy things. So we can see that Trump has already started to grant exemptions for things like beef, bananas, and coffee. Also, it looks like he's going to start trying to lower prices here. At the same time, I'll add a quick update in a bit. Just before we started the broadcast, I heard the latest news. Oh, it's from a foreign source related to the grain market. They mentioned that they saw the latest number this morning. China bought 44 million tons of soybeans. Yeah, I think previously it was 44 million bushels of soybeans. So this is quite a large amount. That's why soybeans went up quite a bit yesterday. So here's something I want to share with everyone. This is basically, well, it looks like, hey, China's buying from you. So the US will probably have to ease up a bit on tariffs. And actually, easing up on tariffs is beneficial for Trump. Now, how tariffs are collected or refunded, that's another matter. But if prices come down, that's a good thing for Trump. If prices drop and inflation eases, it also gives him more room to cut interest rates in the future. Right. Even if he appoints a very dovish Federal Reserve chair next year, if prices don't cooperate, the new Fed chair's ability to cut rates will be very limited. Right, so if rate cuts can't happen next year, that's actually a pretty big negative for the stock market. So everyone needs to be a bit more cautious, okay? All right, moving on, let's take a look at yesterday's stock price index. We'll go through these in a bit. To be honest, from a technical analysis perspective, the situation really doesn't look good. The main issue is that it's fallen below the 50-day moving average. So some analysts, specifically those who focus on technical analysis, are worried that this could be a problem. Is there gonna be at least a 10% overall correction? I want to tell everyone that this is possible. Generally speaking, under normal circumstances in the US is in the US market, it's possible to see a 10% pullback or correction once a year, or maybe two 5% pullbacks, which are both quite likely. So even though we're seeing this, back when the reciprocal tariffs were introduced after Trump took office and those targeted tariffs came out, the correction at that time was quite significant. But now, after about another 6 months of gains, we have to say that technically, from a technical analysis perspective, there is a high possibility of a pullback here. The answer is very likely, and we can't rule it out. So at this point, we still need to be cautious. Pay attention to this. The main point is that the crux of the matter is still AI. Here, let me bring up another issue, the so-called market breadth. When we talk about breadth, it means looking at, for example, the stocks that are declining. The ratio of companies that are declining to those that are rising. Right now, if we look at the components of the NASDAQ, for example, the number of companies hitting 52-week lows compared to those hitting 52-week highs. Only 2.1% of companies are hitting 52-week highs, but 9.5% are hitting 52-week lows. So if you compare these numbers, you can pretty much tell that the overall atmosphere is actually more unfavorable for those hitting new lows. Also, keep in mind that this is based on the NASDAQ, so the stock weights here are relatively small. The so-called Magnificent Seven have been the market's focus since last year, of course, so their performance is going to be different from the rest. Now, when it comes to small and mid-cap stocks, in a way, they actually reflect the real state of the market economy more closely. So what we want to point out here is that you really need to pay attention to the technical deterioration happening right now. Sometimes you really have to take this into account and be a bit more cautious. And in addition to that, okay, concerns in the market about AI overheating, as well as the shock from the interest rate cut being postponed by a month, have already caused risk appetite, that is, investors' willingness to take on risk, to drop sharply and completely disappear. But looking at it from this side, Bloomberg's research team believes, first of all, that the US economy is still showing resilience, and that's a very important point. Now that it's already November, everyone is starting to look ahead to next year, so let me talk a bit about the outlook for next year. Basically, the general expectation for next year is still continued growth. At most, growth might slow down, but you don't really see any forecasts of a full-blown recession. So this is a bit different, and I want to point that out to everyone. This time, if you look at it, first, the economy is still growing. Second, the market also believes that if there are any disturbances or changes in the economy or financial markets, the Federal Reserve will step in more proactively. That's the general idea here. Over the past 10 or 20 years, the Federal Reserve has pretty much had this characteristic, especially since the financial crisis. So the market believes that monetary policy will likely step in to help out, and this could potentially trigger a rebound in the US stock market. In fact, he even said that if things are optimistic, the rebound could happen immediately after Nvidia's earnings report is released. But then he added a caveat. He responded that after the earnings report is released, it often actually triggers a market downturn. So this is also a real situation. After the announcement, the good news is already priced in, and overall, AI stocks have previously been dragged down by this. But let me add something here. Because yesterday, Jensen Huang happened to mention his revenue figures, and he mentioned a pretty big number. So everyone thinks, well, since he said it, it's likely they'll surpass that number. So if the actual results turn out even stronger, then there is a chance. It's possible that this time things might be a bit different. Another reason is that the market had corrected quite a bit before, so this could be a relatively good turning point. But on the other hand, valuations are still relatively high, and that's also something to consider. The fact is, the price-to-earnings ratio is indeed on the high side, roughly above 22 times, around 22 or 23 times. Compared to the long-term average of 16, it's definitely a bit high. But the issue is, as he also mentioned, the current market, the pessimistic sentiment has lasted a bit too long and gone a bit overboard. But the problem with this is, what he's saying here is that this isn't likely to be enough to trigger a crash. But the thing we need to look at is the next point. Let's talk about Nvidia first. Unless Nvidia's performance surprises here, otherwise investors will have to look for other ways to reverse this short-term cooling of enthusiasm. This next sentence, when translated, is actually what I mentioned to everyone before, the so-called the term I use for this is narrative logic, right? This is what I mean by narrative logic. This narrative logic, because the old narrative logic, by this point, it's already been questioned by everyone, so there has to be a new way of explaining things to change the current perception. That is, either what he said about a possible easing, or the cycle is about concerns over AI trading and a surge in capital expenditures for hyperscale data centers. All right, so either something new comes out to change this concern, or we just have to wait until, of course, to add on, I only mentioned that earlier purple term, but what he added is that the stock price has to drop to a cheap enough level, and then people will come back in to take on the risk. See, so I was thinking that my comparison was actually a bit more conservative, or maybe a bit more optimistic. What I meant was that if a new narrative or logic comes in, there's a chance for a rebound. But what he added is, if there isn't a new narrative to change people's perception, then the only way for a rebound is for the price to drop low enough. So you'll see this here. That's why the title is called Short-Term Agony. You just have to wait. All right, then. Also, let's take the opportunity to do a bit of news analysis. Last Friday, there was some news about Michael Burry, you know, the real person behind the movie The Big Short. Michael Burry came out and spoke. He questioned the accounting tricks used by these tech giants, things like overestimating depreciation, which then leads to underestimating depreciation and thus inflating earnings. So basically, he's saying they're making things look better than they really are, and he pointed this out here. So the part I want to refute, or rather to prove, is this. Yes, it's true that technology iterates quickly, and that can lead to overvaluing assets. For example, if you release the GB300, then the GB200 becomes worthless. If you still estimate its value over 5 years, that's just not accurate. That's just a bit too unrealistic, right? But let me tell you, this actually proves something. Americans really don't know how to do manufacturing, you know? They just don't get it. Let me share my theory with you. This was my first rebuttal after hearing that, and I've actually discussed this with my colleagues. I told them, hey, right now, everyone is using 12-inch wafers, right? Everyone knows that. But what about the 8-inch wafer fabs? Where did they go? Were they dismantled, blown up, or what? No, actually, all those 8-inch wafer fabs are still around. And let me tell you, to be honest, even the 5-inch and 6-inch fabs theoretically could still be operating. Okay, I don't know how many 5-inch or 6-inch fabs are left in Taiwan now, but I'm pretty sure there are still some 6-inch fabs running because, for example, Handstar still has a 6-inch fab. All right, so the 8-inch fabs are still operating too. What are they doing? They're making chips with mature process technologies. For example, automotive chips made by companies like onsemi might be produced in these 8-inch or even 6-inch fabs. Why is that? The chips made on these 6-inch wafers are smaller, so the die size is thicker, which means they can handle higher voltages and higher currents. So it's not like 12-inch wafers can solve everything. But if you look at it now, it seems like only 16 and 12-inch fabs are considered the most advanced. And then people think that only chips made with a few nanometers, like those so-called advanced nodes, are real chips. But that's not true. In fact, these mid to low-end thicker process chips are still playing an important role. So here, we need to point out something. At first glance, you might be influenced by this impression, but if you think about it carefully, this situation really exists. It's different, you know? That is to say, the latest products will use the newest models, while the older ones will naturally be used for things they are still suitable for. So we need to recognize this. Of course, there will definitely be some adjustments in terms of depreciation and profits, but it won't be as pessimistic as Michael Burry suggests, and it definitely won't be such a malicious scenario either. That's my view on this. Additionally, let me offer another perspective. This news actually came out pretty early yesterday, either before the market opened or right at the opening. Peter T, he sold off all the holdings he had exited last quarter. Nvidia shares, right? This is the 13th F report. Everyone calls it the 13th floor report. First of all, let's be clear. The 13th F report is always lagging behind. Right now, they're releasing data for September, but it's already after all of October that you get this information. So, of course, when it's released, there's always a bit of a bandwagon effect, which is understandable. But the main point is, this report is delayed. Second, it looks like they sold off all their Nvidia shares, which sounds kind of scary, right? But if you look at the amount, it's only $100 million. Nvidia's market cap is $5 trillion, and they only sold 100 million, so is that really a lot? The answer is not really. Okay, next, let's look at their main holdings: Apple, Microsoft, and Tesla. Okay, Apple doesn't really have an AI strategy, we admit that, and honestly, they've been pretty slow about it. I've joked about it so many times. But the thing is, does Microsoft have AI? Does Tesla have AI? Yes, they do. Out of the 3 main holdings, 2 are still involved in AI. So is it really disconnected from AI? From what I see in their holdings, I don't think so. Also, there's a second point below here. When you sell those stocks, who's buying them? Because look, in September, it went up by 7.12%, and in October, it still rose by 8.53%. So even though it feels like big players are selling, the stock price isn't dropping. That means someone is buying up those shares. All right, so another thing we need to pay attention to is that sometimes an announcement might look huge, like it's really bad news, but after you process it, it often turns out to be more neutral or just some supplementary information. We really have to point that out. What really affects stocks is what's coming in the future, not what's already happened. The stock market is strange like that. Everyone is always reacting to expectations. So I want to discuss this with everyone. Of course, the hottest news in the past couple of days, which we'll see in a moment, is related to this. There's also been a lot of talk about U.S. Treasury bonds. Amazon is planning to issue $15 billion in bonds, their first bond issuance in 3 years, and that's $3 billion more than initially expected. But we need to talk about what they're using the funds for. It's mainly to strengthen their operating capital for acquisitions, capital expenditures, and stock buybacks. So it's not just for capital expenditures. We need to clarify that point. Still, let's compare and take a look together. Looking at the chart below, in 2025, the largest bond issuance is from Meta, and by a significant margin. That's why Meta's stock price has been particularly weak and has come under a lot of scrutiny. Now, as for Marso, I haven't quite figured out which company this is yet. It might be an insurance company, or maybe Mars. I'm not sure. I'll look it up. Let's check on that later if we get a chance. Oracle has issued quite a lot, so as you can see, both the first and third places are currently being questioned by the mayor, which is why their stock prices are relatively weak. So what should be done about this? Well, it will take time to gradually prove that they have the profitability to handle their capital and debt. Only then will the concerns about their debt situation fade, and their stock prices will recover. Now, moving on. Google also issued $18 billion this year, and next is Amazon with $15 billion. So what we want to point out here is that the market is still very efficient. Those that get singled out are questioned, so their stock prices are weaker. But the key issue for us is As for AI, we're still optimistic, especially today in our group. The head of the group held a financial briefing, the fourth quarter one, in other words, the 2026 financial briefing. Here, we still see a main investment theme. Tomorrow's investment theme can be summed up in one sentence. It's still AI. There's no way around it. Right now, it's the most promising and forward-looking technology application we can see. So it's all about AI. So today, let's take a look. Today, what's important is this week, U.S. corporate earnings are still coming out. So let's list them out. Of course, Home Depot, we'll see that in a bit, since they announced their results pretty early before the market opened. And then tomorrow, there's the department store, Ross, TJ Maxx, L Brands, AutoZone, and then Nvidia. The day after that is Walmart. Actually, I think the most important ones, besides Nvidia, are also Walmart is extremely important. There are also some others, as I mentioned before, mainly focused on retailers. The issue is, as we'll see in a moment, there's some underperformers. I don't think this is very good, and it even dragged things down a bit. This is one of the reasons for the market's pre-open performance today. For example, Home Depot announced its earnings, which were actually better than expected. But its EPS was actually worse than originally expected. So its earnings fell short of expectations, and compared to the previous quarter, earnings also declined. The key point is that they also lowered their guidance for 2025. They mentioned something pretty negative, saying that home improvement and renovation activities have been sluggish for a long time, with almost no sign of ending. All right, and then I also saw an English language analyst report mentioning what's called big ticket sales, meaning that the number of large orders or big clients has decreased. How should I put it? If you're just buying a faucet to replace a faucet, that's considered a small purchase. But if you're remodeling your entire bathroom and need to buy a toilet, faucet, sink, and so on, that's what's called a big ticket, meaning the average order value is much higher in this category. He said that right now, it looks like this segment has dropped a lot. In other words, Americans are really trying to cut back. Unless it's absolutely necessary, they just won't replace things for now. Why? Because money's tight, incomes are going down, and interest rates are still high. Since most people pay in installments, when they do the math, they just don't have the money, so they hold back. So this is really not good. Why? Because houses in the US are made of wood. If you can hold off on repairing things in a wooden house, that really means your financial situation is bad. Otherwise, you'd have to fix things in a wooden house. Why? Because with wood, you can't wait. If something breaks, you have to deal with it right away. So that's basically the situation with Home Depot. And then, before the market opened, I checked earlier, around 6 or 7 o'clock. Before the market opened, it was already down 1.88%. So in a moment, you'll see that not only is Home Depot not doing well, but it's also dragging Lowe's down with it. The good news is that Walmart hasn't been much affected yet, so that's something I wanted to point out. But for me, I pay more attention to this. Why? Because this relates to household and construction-related spending, and it looks like this is a more significant issue. It's still a relatively negative development, reflecting that U.S. consumer momentum is really weakening. So it's no wonder that Trump has recently started to shift his focus back to domestic issues in the U.S. Also, yesterday, some data was released, but there were also delays. Industrial production, this is actually Tuesday's number. Industrial production data has been delayed. So yesterday, maybe the dates were marked incorrectly. Yesterday, the New York Fed Manufacturing Index was released. Here, we saw the forecast for the manufacturing index was 5.8, and previously it might have been, I think, 7.7. It was originally expected to decline, but the actual number released went up. So this is relatively optimistic. It's worth pointing out that there was an increase in both new orders and shipments, so the manufacturing sector looks better than everyone expected. In addition, the construction spending data also came out. The monthly increase was 0.2%, while the expectation was a monthly decrease of 0.1%. So this is better than expected. However, it was mentioned that government flat spending will cause both the residential and non-residential sectors to remain in a weak state. So basically what they're saying is that for some construction applications, if you report them to the federal side, there might be a pause, so things get pushed back. And overall, the construction industry itself, the U.S. construction sector, ever since the interest rate hikes, has been significantly affected. The impact has been quite substantial. So as of now, This situation actually feels a lot like what's happening in Taiwan. If you look at Taiwan recently, our industry researchers have all reported on this. The number of property transfers in the 6 major cities lately, after the new mortgage rules have been enforced more strictly, you can see that the number of property transfers has been steadily declining. The real estate market is cooling down. The same thing is happening in the US real estate market. It's cooling off too. So basically what this means is that in the short term, the mortgage industry will drag down economic growth. That's pretty much the situation with the US mortgage sector. Another point I should add is something I only saw before the market opened today. The US Department of Labor has started releasing figures on the number of people receiving unemployment benefits, but I want to tell them that there are many problems with these numbers. The first problem? Today is November 18th. Well, last week was already November, so we'll probably have to wait until the second week, which means this is it. Speaking of these numbers, October 18th is actually a relatively early figure, and then the number of initial claims and continued claims has been fluctuating, with the difference being about 10,000 people. But the main point is, after the government shutdown, these numbers actually couldn't be updated. So during the shutdown, they used the state-level unadjusted unemployment benefits data, meaning they used the weekly reports that hadn't been adjusted yet to do a preliminary data analysis before releasing the information. So to be honest about this part, it's just not accurate. And not only is it not accurate, but there's also a lot of room for revision. Plus, since time has passed, whether or not you can make up for it later is uncertain. So it's really troublesome. I just wanted to let everyone know about this, so just take it as a reference, okay? So here, you might need to be a bit more patient and wait a few weeks to see the actual numbers that are released. The numbers that come out later will gradually become more stable. So I want to let everyone know about this situation. Today, there will be some numbers released, but there are also some that are definitely going to be delayed, like the trade balance and industrial production. These will be announced later. And in addition to that, what will be released today is the ADP weekly employment change. This is not the number for unemployment claims, but rather the ADP, which is like a mini non-farm payroll report. Because of the lack of economic data, they said they would release this weekly. However, it's mainly for reference because this is a private organization, not a government agency, so it's not what Americans call the gold standard of data. In addition, the NAHB Housing Market Index will also be released. If I remember correctly, this is from a private organization or maybe a semi-official institution, so this number should be published. And then, besides that, the US factory orders for August will be released at 11 o'clock, so that will be announced tomorrow morning. Also, the US International Capital Flows report will be released, which tells us, for example, how much US debt China bought, how much Japan bought, and so on. This report is good, but the problem is, I'm a bit skeptical about whether this report will actually be released because, well, originally the US Treasury was also supposed to release its monthly federal budget report, which is the monthly fiscal deficit, but then because of this, originally it was set for a specific day, but later it became a set time window, and even then they didn't announce it according to the schedule they gave, so we might have to wait a bit for this. I think things are still a little chaotic now that the whole government has resumed work. So as we can see, we need to wait a little bit. Also, let me add a few news items about Trump. First, yesterday, Trump said he has no objection to using military force against Mexico to stop the flow of drugs. But the problem is, Mexico does have an objection, because that would violate their sovereignty. So this is the same old issue, and then, in the past couple of days, the more dramatic development has been with Venezuela. It seems like they might be entering negotiations with Maduro, so maybe there won't be any fighting. Of course, if it can be resolved without fighting, that's definitely a good thing. No loss of life is always a good thing. And then he also feels proud about destroying Colombia's cocaine processing factories. This is all part of it. He and Mexico have both been asserting the sovereignty of Latin American countries, and that's really what they're doing. Yeah, these are all issues in Latin America, so we won't go into more detail here. Also, the US Senate might speed up the vote on sanctions against Russia, mainly because Trump has given the green light, so things might move a bit faster on this front. Lindsey Graham, he's one of the main figures who is both anti-Russia and anti-China, so it's not surprising that he's leading this. Also, as I just mentioned, there's this purchase of 4,400 bushels. So that's the news here. So we can see that soybean prices have jumped. Okay, so in the near term, they will buy 7 to 10 shipments, and the delivery for one of these contracts will be in January next year, and then after June. So the schedule's actually pretty spread out. Maybe it's not as many as the numbers mentioned by Shenzhen before, but at least we can see some orders coming in, which is actually pretty good news. Another thing is, you know the saying, you can't bite the hand that feeds you, or if you take someone's hand out, you can't speak ill of them? Since these orders just came in the short term, I think Trump will have to, over there in China. It's a bit hard to take a tough stance, you know, because the main thing is, you see, the orders are coming in. Maybe Trump might just do it for the money. So a lot of times people in business will just choose to turn a blind eye. So everyone just keep that in mind. Now let's take a look at the financial markets. The US dollar went up, then on Tuesday it turned down, but actually I think it's just a rebound, still below the 200-day moving average. It's not surprising to see it go up, because after all, the key is whether it can break through the 200-day moving average after hitting it. Right now, it's basically moving sideways. As for the 2-year yield, it edged up a bit yesterday, but today it's starting to go down again. I think this might be related to the market being a bit unstable, especially the stock market, and people are showing some risk aversion in their mindset. The 10-year bond is the same. It dipped a bit yesterday and continues to fall today. So overall, it looks like there's a bit of a risk-off sentiment in the market. As for oil prices, there are still ongoing geopolitical conflicts. Russia and Ukraine are still at war, but Russia quickly resumed exports from its oil ports, so concerns about supply disappeared in about 2 days. That's why prices fell on Monday and continued to drop on Tuesday. So it's the same situation here. Oil prices are basically moving sideways, consolidating. Anyway, the point is, it's better if it's not too high or too low. As for gold, it dropped 0.96 on Monday and then continued to fall on Tuesday. But there's something we need to talk about here. Looking at the arrangement of its candlestick chart, it seems like the 4,000 mark is acting as a support level, so please pay attention to that. Yesterday, I also mentioned that the key point to watch is the hourly chart, so if you're interested, keep following along. Also, Goldman Sachs estimated that China's gold reserves increased by 15 tons in September. The official estimate is actually higher, but first, how does Goldman Sachs come up with their estimate? Goldman Sachs has their own unique methods, so just take it as a reference. Basically, what this means is that central banks around the world are interested in gold. So if you're bullish on gold, it's likely that you'll have a major buyer on your side, and that's pretty much what this implies. Now, as for Bitcoin, it's been collapsing like a house of cards. I've already mentioned this to everyone. After it dropped below 100,000, people got worried. Now, even though it's not a futures contract, it acts a lot like one in trading. Once it starts falling, it drops fast. And now it's already fallen to, it's around 91,000 now. Actually, during today's session, it even briefly dropped below 90,000. That's pretty weak. And more importantly, from a technical perspective, there are still no signs of the decline stopping. So it might keep dropping further. When will it bottom out? Well, I think you should just watch the charts. Okay, so if you, I believe, if you're involved in this, you'll probably know how to handle it yourself. Because actually, when we talked about the key psychological level of 100,000 before, that was already a critical point. And then when it broke below the 200-day moving average, that was when you should have started making a contrarian move. So please take that into consideration, everyone. Now back to the stock market. NVIDIA, everyone is waiting for NVIDIA's earnings report and also for the delayed release of fund data. Both of these are what people are waiting for. But tech stocks are relatively weak, so the whole Monday was the Dow Jones dropped as well. Now the issue is, it seems like tech stocks are weak, but the Dow's decline was actually even bigger. Why is that? Mainly it's because of a few high market cap stocks, like American Express and Goldman Sachs, especially Goldman Sachs, which is a high price stock and represents a significant weight in the Dow. Its drop was relatively large. In addition to that, tech stocks are still affected. For example, old school tech companies like IBM and Salesforce both dropped more than 2% yesterday. Then there's American Express, which is also a major player in the financial sector and has a significant market cap as well, but it also fell by 4%. Pretty scary, right? And then there were 12 stocks that dropped between 1.11% and 1.94%, so it really looks pretty bad. The declines are quite significant. Also, the S&P fell yesterday too. We should especially mention that the candlestick pattern doesn't look good. First, on Monday, there was a bullish candlestick. Last Friday was a bullish candlestick that pushed the price back above the 50-day moving average. But yesterday, it opened near the 50-day line, yet closed below it. During the session, it briefly went above the 50-day line, leaving an upper shadow. That's actually a signal that the trend is continuing downward. Unfortunately, as we'll see in a moment, the performance of the futures and the pre-market also suggests that the correction is likely to continue. This time, it really could be a more significant correction. The volatility index has actually gone up again. On Monday, it surged sharply, reaching 22.38. Once it goes above 22, actually, once it's above 20, you really need to be cautious. That's a pretty bearish sign. So on Tuesday, today, it continued to climb. Yeah, it's like a shooting star. The market will only start to stabilize once it actually reverses and heads downward. All right, now let's talk about the single-day performance of the S&P's 11 sectors. Here, I want to mention Google. It performed pretty well, and of course, it also has Buffett's backing. Western Digital saw a rebound after a significant drop. The logistics company Expeditors also went up. In addition, there were 7 stocks that rose more than 2%. But on the downside, Dell was relatively weak, and as we'll see in a moment, that's because its rating was downgraded. So Dell dragged down HPQ and HPE along with it. There were 4 stocks that dropped more than 7%, 3 that fell over 6%, and 7 that declined more than 5%. Looking at the S&P side, the drop yesterday was pretty significant, and the pressure is still quite heavy. Also, I want to talk about the month-to-date performance. The main thing you can see, what's been doing well? Life sciences. The Pharmaceutical, Biotechnology, and Life Sciences Index, that is healthcare stocks and medical equipment stocks, those are up, with medical equipment stocks rising the most by over 7%. That's good. The second best performing sector is insurance, the third is telecommunications services, and the fourth is food and beverages. Because if you look at the 4th or 5th sectors, you still don't see anything related to technology, so this time you can see that tech stocks are actually under more pressure. Like I just mentioned, in September and October they were all going up, but after November it looks like the correction pressure has gotten bigger. And the second thing we want to talk about is using the S&P's 25 category classification index, which is a bit more detailed. If you look at it from the beginning of this month until now, you'll see that by the 9th and 10th places, they're already showing negative returns. In other words, the stock market is actually under quite a bit of pressure, and it's pretty widespread. Not only are the heavyweight stocks underperforming, but if you look at the market breadth, you'll see that there are actually very few sectors that are going up. So the pressure is quite significant. But I think I should still talk about this next. The heavyweight stocks also went down yesterday, but what I want to say is that even though they're dropping, I'm not pessimistic. Like I just mentioned, when stock prices correct to a reasonable level, you can expect a reversal. Or if there's a new narrative or logic coming in, I think there's a chance for a rebound. So right now, I'm still leaning toward optimism. So it's the same with the NASDAQ. Its situation is pretty much like the S&P. First, it opened below the 50-day moving average, then closed lower, and it was a red candlestick with an upper shadow. So this is relatively obvious. I think, looking at the tech sector's pattern, my view is that it's getting ready to keep dropping. As for the SOX index, it's even weaker. Yesterday, ASML went up more than 1%, and Intel also rose more than 1%. But the key point is that only 3 other stocks went up. I remember that the big movers weren't doing well either. The weaker ones included Skyworks, which led the decline, then Intel dropped, and Rambus also fell. Qualcomm, too, was down. As for memory stocks, you can see that in Taiwan today, memory stocks weren't that strong either. I also want to mention that it looks like there's support at the 50-day moving average. Of course, the key point is, if the market really wants to drop, there won't be any support. If it can actually hold, then it will stay above the 50-day line. But seriously, if we take a look at the futures market and the pre-market performance, it already feels pretty discouraging. The Magnificent 7 stocks are doing relatively well, and it looks like the index only dipped a little. But we also need to point out that its candlestick pattern is the same as the S&P and the NASDAQ. The only difference is that it closed with a red candlestick, but the real body is very small, and it closed below the moving averages, specifically below the 50-day moving average. Even though it's a red candlestick, it doesn't really mean much. Plus, there's a relatively long upper shadow, which shows weakness. The candlestick pattern isn't looking good at all. As for the stocks that went up, it's basically just Google and Tesla. It feels like Google is being propped up, maybe because of Buffett's influence and his control over the market. The rest are all down, and Nvidia actually dropped the most. So moving forward, we probably won't talk about individual stocks anymore, just a general overview. The pressure is still pretty high, but most importantly, let's take a look at the pre-market performance. What I really want to share and focus on with everyone today is the pre-market. The Dow futures are still down 0.7%, the NASDAQ mini is down about 0.48%, and the S&P mini is down 0.48% as well. The NASDAQ mini is down about 0.6%. If you look at these drops, that's not particularly good. This drop isn't exactly small, but it's not huge either. If the market opens at this level, especially after leaving a shadow line and then opening even lower, and if it keeps dropping and breaks below Friday's low, then that would confirm a new low. The lows keep getting lower and lower, so the pressure here is pretty significant. There is definitely short-term pressure. Okay, so even though I'm not pessimistic, I have to be honest with everyone that there is short-term pressure. Now, let's take a look at some individual stocks. Just now we saw MDT, which is Medtronic. This is a company related to medical technology, so it's been performing relatively well. Then in second place is Merck, the pharmaceutical company, so that's also doing well. And FCX is Freeport-McMoRan, which is mainly in copper mining. As for INSY, I forgot what they do again. MOH is in healthcare, and MTU is, this one isn't software. This one is Spellin and Open Model and New Deal. This one is probably actually software. This might be a company that makes tax filing software. As for Google, its performance is still on the rise, and Buffett's influence is still pretty strong. Deckers, this one is Volvo and Valero are both up. Valero is traditional energy, and CF should be either specialty chemicals or industrial gases. Then MCK, I think, is in the spice business. Also, let's take a look. Monster is performing well. That's Monster Drink, the energy drink. Duke Energy is up as well. And this NOP is up. Dow Chemical is up. And they can also push up TAG. This alcoholic beverage brand is up, and AMG is also up. But you can see that starting from about the 8th or 9th place, the gains are much smaller. Now, let's take a look at the declines. See here, GP, this should be, this is Tapestry, which is the parent company of Coach, and it didn't perform well. Then you see HD, that's Home Depot, also didn't do well, and that dragged down Lowe's. Then CTX is STX, Seagate, and WDC, which is Western Digital. Yesterday they did well, but today they're not doing so great again. Robinhood Markets also didn't do well, and Honeywell, this industrial stock, is also underperforming. PLTR has been relatively weak recently, and the main thing is still that. Michael Burry is still bearish on PLTR, right? And actually, for PLTR, I think there's just one conclusion. It's gone up too much. Its business model, right now, no one can really compete with it. After correcting, I still think there's a chance. Okay, as for AppLovin, it's a bit weak, and Amazon is also relatively weak today. Then let's look at Dell. It was downgraded yesterday and continues to be weak today. Skyworks also continued to fall today after dropping yesterday. Empower New Energy Systems is also down. Microsoft is down. You can see that everything is down today. We just saw almost 20 names. The declines are all over 1%, so the selling pressure is actually pretty significant. People are probably starting to shake their heads, and they more or less know what's going on. Today, the stock market might have a tougher time. Let's take a look at the companies that had net position adjustments yesterday. This one is a power company, the largest power plant in the US, and then Apogee. Oh, I forgot what that is again. Maybe I checked it before the market opened and forgot to mention it. It's a packaging materials company, and this one is a mortgage company. Then there's Block, a fintech company, but it's not that one. It's not the one related to Bitcoin, but rather the one that's focused on financial technology, fintech. And as I just mentioned, Expedia, this one is a medical supplies company, that logistics company. Gap is a brand manufacturer, and then OI, this one is packaging materials. Today, I saw some packaging companies that make bottles or some paper packaging. Some of them had their ratings downgraded, like pet bottles, but some were also downgraded for no apparent reason. No one really knows why. I forgot what this one does for a moment. Vita Coco is the company that makes coconut water, and then Yum Brands is the parent company of Pizza Hut. I'm mentioning Rubik because there was some news before the market opened. Let me talk about it first. Sometimes I forget, so I need to include it. Rubica is a software company, and the name sounds a bit Indian, right? Then Charles River is that laboratory, and it was also adjusted. All right, then Progressive is the auto insurance company, and then Extra Labs is the one that was previously related to AI. It was upgraded, but its stock price has been a bit weak recently. FTC Solar was upgraded. Let me talk about this company first. This company is in solar energy, but it's not traditional solar. It uses a technology that allows your solar panels to track the angle of the sun so the efficiency is better. This is actually pretty interesting. But I haven't looked at their financials yet, so I don't know about their revenue or earnings. I'm just telling you that their credit rating has been upgraded, which is pretty interesting. Now, as for the downgrades, those are actually more straightforward. Some of them are related to people's livelihoods, like the ones mentioned earlier. Biotech is related to 3G Health, which is also in the biotech sector. If I remember correctly, this one is also related to livelihoods, and this one too is biotech. So basically, the first few are all about biotech. Then there's CoinBridge, which is related to pensions, and then there's HP. Dell, HP, HP1. Oh, this is because Dell had a price adjustment. So this whole group was downgraded by Morgan Stanley, which is why it's relatively weak. Then for packaging, this karate company is about packaging materials, like for food and other items, and this one is also packaging materials. I remember the top three here are all related to packaging, mainly for food and cardboard boxes, and Calico is the kind of company that does packaging for things like beverage containers and so on. They were downgraded as well, so that's basically the situation. All right, let's get back to what we were just looking at. Looking at the performance of futures and individual stocks, it still seems pretty tough today. So maybe everyone just needs to be aware that this round of AI corrections looks like it might continue for a while in the short term. Now, let's take a look at something. Let's check out everyone's questions. The 50-day moving average for all US stocks, or rather all the daily lines, are down. Yeah, it's pretty bad. The Fed is even more worried about inflation. Why? Because for Fed officials, actually, in their minds, out of the three main drivers, this is usually the most important thing for them. All right. Tech stocks are all at relatively high points, yeah, but they might need a correction too. Just like, yeah, and then the market is seriously short on cash. If rates aren't cut soon, some stocks will drop. But actually about this cash shortage, I should clarify. This time, it's not the Fed's problem. It's an issue with the US Treasury. And then I still think they will cut rates, but whether they'll hold off once and then cut later or cut after that, I don't know, but it's something to watch out for. Now, about memory chips causing the collapse of the PC industry, do I finally get it? I don't think it's that bad yet. Sigh. When we talk about memory, let's talk about something here. Let me give everyone a little benefit here. It's been so tough. It's been so tough, and you're still watching this at night, right? There should be something in it for you, so let's take a look. There's something about memory chips, because it suddenly reminded me of when I was younger, and there was this really cocky senior who talked about memory chips. He told me, memory chips are really good at cycling, didn't you know? Honestly, I had no idea why. By the time I entered the market when I started working, this cycle was already at its tail end. Back then, I still didn't really understand the stock market or anything like that. I had just graduated not long before, still a total newbie, but looking at it now, well, this is how it is. 234 is the monthly chart for Winbond. Now, Winbond's memory business isn't really top tier anymore, right? I think they're mainly making SRAM, or at least their main focus is still SN-type memory. But what I want to say is, whenever there's a shortage of this kind of memory, sometimes it can get stuck for a really long time. So please pay attention to that. Of course, it's actually pretty simple. Just follow the price quotes for now. That's the way to go. All right. So Asus, Dell, HP, well, poor Dell. No, let me tell you, after this kind of memory shortage, basically you just have to get ready to pass on the costs. Really, that's all there is to it. It just depends on how serious the shortage is. I seriously doubt it. Bitcoin is reacting not just to the fact that interest rates aren't being cut. I think it's not only about that. It's also reacting to people cashing out and running away. So why are they running? Maybe it's just people cashing out at the top. There are two things. The price dropped below 88. And let me tell you, with Bitcoin, honestly, Bitcoin is the kind of thing that goes up fast and comes down just as fast. Then the China-Japan currency swap messes things up, causing both stock markets to crash. So basically, that's what I think is going on. Japan is going to have it a bit worse, but we won't get into the details. So during the day in East Asia, all the East Asian stocks took a big hit. That's right. Actually, it started with the US stock market crashing the night before, and then Japan had its own issues with China. Things aren't looking good, and Foxconn is just following the trend and investing blindly. 2000, that's actually right. Nvidia's golden child dropped. Oh, I just realized this was about COVID over here. Yeah, this is actually really, really bad. But plenty of stocks are dropping even faster than Nvidia. Of course, the faster they rise, the faster they fall. Even if you made a profit and cashed out, it's not like you made 8 times at the peak. People are afraid of bad news, and there are a lot of accumulated profits waiting to be realized. Oh, right, there was just a bit of news. Cloudflare had an outage, so some people experienced downtime. Actually, the problem is right here. Once there's some kind of outage, you basically can't use it, and that's really rough. Actually, Trump wants to introduce 50-year mortgages. Trump is pushing for 50-year mortgages, but the market's reaction has been really bad. Honestly, if you really want to help real estate, to tell the truth, cutting interest rates is the right move. That's why he's been wanting to cut rates all along. Because from his experience, lowering rates is very important to him. Apparently, the Chinese medicine qualification no longer exists. As I keep talking, it gets smoother. At first, I stumble, but it improves. Anyway, the most important thing is, I still go to Western doctors. There's no other way. My issue is allergies. It's a bit troublesome. Okay, so where is this policy of late or special supplementation headed, right? Where's the problem? Actually, Zahan, you've already caught on to Trump. It's kind of like treating the head when you have a headache and treating the foot when you have a footache. That's one tendency, right? And today, Trump has targeted TSMC for the 4th time. It's fine, everyone just keeps going at it. Anyway, like I told you, I've even mentioned this before. Americans' math is definitely worse than your English. I don't know how good your English is, but I do know that Americans are terrible at math. Alright, if you can't even handle math, then you go work in a semiconductor factory. You really won't know what to do. It's not that simple, okay? So as we're saying, you think this year it's just going to keep going and you'll be like, oh, it's fine, just keep advancing? Yeah, that's how a lot of people think. And then, well, things crash, right? So X crashes and squared crashes too. So there are a lot of system crashes. Today, maybe the business system can get in, but another back-end system could be the problem. What I'm saying is, this is really a cloud network issue. These problems happen with the cloud. This will have to be fixed later. For now, everyone is focused on solving this first. We're working on solving this issue with AI investments. So for now, let's just keep our focus here. Now, if you look at today, you can see that the Dow Jones's losses have widened again, so things are still pretty troublesome here. So today, it might be wise to take a more cautious approach in the short term. Let's look at Thursday. After Nvidia's earnings report comes out, we'll see and review whether there's a chance for the market to stop falling. But I think the most important thing is probably to wait until December 9th, when Oracle will have to face its own challenges. Once they can clear up all the market's doubts, I think that's when things might start to look a bit better. The right time, you know. So, okay, someone came to help me verify that Americans are really bad at math. So just remember, your English might not be great, but Americans' math is definitely worse than your English. Just keep that in mind. So if you want to move TSMC's fab, go ahead. I believe you, but I bet you can't move it. All right, if there are no other questions, we'll stop here for today. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.